Ladies and gentlemen, first and foremost, welcome to today's special edition training video for the $5 investment challenge for 2024. First of all, I just want to commend you not only on taking part in the challenge, but actually showing up to the classroom tab to learn a little bit more about why I'm doing this challenge, but also just here to show you the power of getting invested and staying invested. And so that's the objective of today's training video. We're going to hop over here onto the computer. Now, as we come over here on the computer, again, this is the $5 investment challenge. And first and foremost, I want to remind you guys that anybody that wants to take part in this challenge can go to 5in Daily, as you see on the screen there. That's 5indaily.com. And I want to make sure everybody knows that this is free. And this is simply a challenge, kind of like a fitness challenge, like 75 hard, but for your finances, just to get started. It's not about $5. It's about the discipline and the consistency it takes to invest $5 a day. For some of you, that's not going to be a drop in the bucket, and you're going to need to increase this to $10, $20, $50 or more per day in order for it to make an enhancement to your life. But regardless of the amount, the importance is taking the consistency of $5 a day. And that's what we're going to talk about in today's training video. So first things first, as we get started, we ask ourselves this question: why should we invest? What reason should we invest? And everybody has a different reason to invest, but a lot of us, we want to grow our wealth, aka our net worth. We want to grow what we are worth and what we can potentially create over time so that later on down the line, maybe past the time that we're even here, long generations gone, they can feel the impact about the decisions that we made to invest in the stock market, in the crypto market, in the commodities market, whatever it is. You guys know the rules. You can invest in anything you like. The point is $5 a day when the stock market is open. That is it. Post your results, remain consistent. Just like a 75 hard challenge in fitness, remain consistent. What we're here to do today is we're here to plant a money tree. Now, that's not literal, but to plant something that will start to spit us off cash flow and appreciation and value over time. Because what we can tell you, and what I can tell you, and I'll show you today, is that the money in the bank is losing value to inflation. It's getting destroyed. And it's probably going to continue to get worse and worse for decades to come. And that's something where you have to say, okay, I understand that money is not the best place to be to keep in cash. It's not the best place to keep it at all, is in cash. What should I, where should I, how should I invest? And it starts with $5 a day. Again, I want you to think about creating wealth that outlasts you long term. If money doesn't grow on trees, then why do banks have branches? Okay, I'm just kidding. But the point is, guys, I want you guys to be able to grow a money tree and build that up. So the first thing I want to start with today is a question or a statement, more of a statement, but you could ask yourself this question: is anybody coming to save you? Look at me in the camera. Is anybody coming to save you? Nobody's coming to save me. I don't think anybody's coming to save you. In fact, check this out. Not sure your age. Some of you this will matter for than others more. In 2021, a trustee report from Social Security found that in 2034, retirees will start receiving a reduced benefit if Congress doesn't fix the funding issues for the social program. In other words, Social Security will exist after 2034, but retirees will only receive 78% of their full benefit. Over and over, these headlines are starting to become more public. By the time that some of you right now, you're in your 20s, your 30s, your 40s, by the time you reach retirement age, let's face it, Social Security may not be there. Do you want to work till the day you die? Or do you want to have a nest egg that you can start to utilize as a retirement plan so you can finally relax and not work like a horse all of your life and never have a time to just relax and breathe? That's what today's message is about, is building this nest egg. So time is the most valuable thing we've got, folks. It's not our money. Time is our most valuable asset. On average, the S&P 500 will return 11.88% annually. Now, some months we're going to invest more than this, some a little bit less than this. But $100 per month invested at that 11.88 annual return will give you $285,000 for 30 years. You can take the calculator out and simply multiply. Really quick, take a calculator and multiply that $1,200 a year times 30 years. That means you invested $36,000 over 30 years, and it's now worth $285,848. Think about that for a minute. $250,000, $250,000 appreciated in value because you invested in things that were appreciating, not depreciating. And it's funny because some of you guys are going to laugh at this and hopefully make a comment about this in the community tab. But in school, in college, in high school, and grade school, we're taught about assets and liabilities. And what is the first asset they teach you about? Cash. Yet, historically speaking, cash for over the last 100 years has depreciated in value. $100 in 1900 is worth less than $10 today. $1 in 1900 is worth less than 10 cents today. Does that mean that $1 is literally worth 10 cents? No. It's what $1 got you in 1900, only about 8 cents can get you today. And so we need to put our money into things that will at least catch up to that curve, at least, and hopefully then some. And that's what we're going to talk about today. We want to invest like these guys, boring or not. Rest in peace in the middle there, Charlie Munger. I believe most of you guys all know who these people are. If you don't, take a picture of it and research it. You should. If you don't, you need to. On the left, you've got one of the most notable, if not the most notable investor of all time. The grandfather of investing, Mr. Warren Buffett of Berkshire Hathaway. And you think about how did he invest? He started investing, he stayed invested, and now 10s, 20s, 30s, 40s, 50, more than that, millions of dollars a year he makes in just dividends from his investments. Never has to touch his capital. Tremendous job and case study, and things that we need to learn from to invest like these people, which is, again, getting invested and staying invested. It's not about the $5. It's about the mindset and the change that must happen for you to become the person to put $5 in every single day without falter, no matter what happens. Take a look at this. This is the total return of the U.S. stock market versus bonds versus gold from 1871 until 2017. Look at the difference, really just of the blue line on top there, compared to the bond market, compared to the gold market. It is tremendous what you can do by simply getting your money invested into the S&P 500. Compared to gold, compared to bonds, it is tremendous. Secondly, this right here is an example of the odds, statistical odds of your cash, not cash in the bank, cash that you put in treasuries. Go research that if you don't know what that is. Maybe we'll do a training on it at some point if enough of you make posts in the community tab. But if you look at treasuries and you were to invest your money into short-term treasuries, this is the odds that your stocks would outperform your cash, aka your treasuries. In 1 year, 31% your cash would outperform. That's it. Jump it to 3 years, only 23% of the time your cash would be better off. Meaning a lot of people think, oh my gosh, it's scary, it's risky to put my money in the markets. By year 7, 16% of people, 16% of the time, 16% was your cash outperforming your stocks. By year 20, you have a 99% chance that your stocks will outperform your 1% chance of your cash. And by year 25, it's never happened. In 25 years, some of you guys are thinking about right now starting a portfolio for 20, 30, 40 years. Think about it. Some of you guys are in your 20s and 30s. There's never been a time in history where your stocks have not outperformed your cash in treasuries over a period of 25 years. And this data is simply going to get worse and worse in the case of stocks, getting better and better. Why? because rates historically from the 1980s, I don't care if you're talking about COVID times and oh my gosh, they raised rates, Patrick, to 5.5% was the Fed funds rate. That was the highest we'd seen in so long. Compare that to what we'd used to see in the 1980s. People were getting mortgages for 15, 20%. Our measly little 7% wasn't even a deal. The higher those rates were, the higher treasuries were. That's why this is even where it is now. The point is, long term, we are in a rate-reduced environment, and I believe that will continue for the next 10 years. Stocks, assets, not just stocks, cryptos, commodities are things we want to try to work on getting our cash into for $5 a day. Now, take this, for example. On the left side is people that just trade like I do. We long-term invest. We find fair value of a security, aka we find something that we believe is fair in value for stocks or commodities or crypto. We use all of the data, annual reports, news, statistics. We build a long-term position, and we identify overvalued assets. On the right side is a person that's trying to get in and get out, and get in and get out. And newsflash, they almost never outperform the people on the left, the people that simply get in, and then tomorrow they get in, and then next week they get in, and then next year they get in. And they are simply buying things that they see value in long term. That is a fundamental investor. That is what you need to become in the $5 challenge. 5indaily.com, in the 5in challenge. So, quick question for you guys. Do you want to know something interesting about technical traders you just saw right here on the right side? You want to know something interesting about these get in, get out, get in, get out, get in, get out type of traders? There are 0 technical style traders on the Forbes 500 list. 0. Yet there are many on the fundamental side. I don't know about you guys. I know that that's probably going to change at some point. Somebody will break that barrier. But I'm going to go with history and say, man, the people that simply got in the markets, got invested, and then stayed invested had a better return, had better results. So here's our focus. Our focus is to move $5 out of our cash and into something each New York Stock Exchange open day. What does that mean? Because we're able to buy crypto, I have to say this. But as you guys know, crypto markets are open every single day. Yet this challenge is all about buying only on days the New York Stock Exchange is open. So that means we do not invest our $5 on a Saturday or a Sunday, and we do not invest our $5 on a closed holiday, a holiday that New York Stock Exchange is closed, something like Thanksgiving, something like Christmas, something like President's Day, what have you. Second, we buy something we value. I'm going to share my strategies and principles, no problem, in upcoming trainings and videos and public videos, and this challenge will be a global challenge from people all over the world. But you and your goal, I'm never going to tell you what to do. You're going to buy something you value. Some of you might want to buy crypto more than stocks, while others would say commodities over crypto. That is up to you. Our goal is to hold for a long time and build wealth through stocks, crypto, and commodities. And what I'm going to do, I'm going to try to find a nice mix of all three at $5 a day. It sounds insane, but that's what we're going to do together. And I assure you that if you can set aside that $5 a day and build it into assets that you see holding value for a long time and actually do, you're going to see how much this can change your life. Now, what we want to do is pay attention to value, not price. Oftentimes people think, okay, so now I need to find the cheapest stock or the cheapest crypto. No. You need to find things that have good value. See, a stock that's $100 might have better value than a stock that's $10. Just because the price of one is cheaper doesn't mean it has the ability to go higher than the $100 one. You must get good at identifying what has plenty of value. And that might be an ETF, that might be a crypto, that might be gold. Again, we must identify things of value. So this is why I choose not to day trade. And I say stocks, but frankly, cryptos as well, commodities as well. Why don't I day trade? Here's my reasoning. Number one, it's relying exclusively on technical analysis, which will cause us to ignore what's actually driving price, which is our fundamental news, economic behavior. Number two, more emotions the entire trade. If you're in a trade and you're in and out today, you're going to be staring at it all day. But if you're doing the $5 challenge and you put $5 in today, you're going to forget about it. You're going to go to dinner. You're going to go to sleep. You'll do it again tomorrow. And slowly you'll see this portfolio. Oh my gosh, I'm at 5. Now I'm at 10. Then you're at 20. Then you're at 40. Then you're at 80. Then you're at 200. And before you guys know it, you're going to have $500 portfolios. You're not going to have an emotion attached to it, though. That's what's amazing about it. It's also difficult to predict day-to-day chart movement from a day trading perspective. It's very difficult. What we're doing in the $5 challenge, I'm not saying is easy, but it is certainly, I would say 99% easier than day trading. And it forces you to be focused more on price and less on value when you're day trading. You're focused more on right now the nitty-gritty price and not of the underlying value. Maybe you're focused on this price, but it's completely overvalued. You shouldn't be buying in the first place. Here's why I choose to fundamentally invest. This long-term, what I say, get invested and stay invested. That's the $5 challenge. Get invested is putting the $5 in. Staying invested is keeping it in. And then tomorrow you're going to do the same thing. Getting it in and keeping it in. Getting it in and keeping it in. Just like we learned when we were kids. With that little piggy bank to put in the piggy bank. And over, and then suddenly you've got $20. So this is why I value invest. I get to focus on asset health. And I say asset health because it's not just stocks. It could be commodities. It could be cryptos. We focus on the health of the asset. I have zero day-to-day emotion. I take advantage of market cycles. So guess what? When markets are up and they're rolling and rolling and rolling, I'm still putting money in. And I'm taking advantage of that. And when markets are now correcting and dropping and dropping and dropping, guess what? Once a day, I'm putting in. Yes, some of that might be losing value, but I'm adding to my position as it drops. Both sides is a good thing for me. I'm buying on value, not price. That's so important because now I'm buying things that actually have the ability to go up longer, higher, long term. Now, what I also want to mention to you, why I value invest, is my risk management style. The longer you hold, the more your risk diminishes, believe it or not. Some of you guys probably don't even understand that. Statistically proven. The longer you hold an asset, say the S&P, the lower your odds of losing money. In this case, you win big or you lose a little. And we're focusing on holding this for at least a year. And our challenge, as you guys know, it's being all 2024, starting in February. Obviously, some of you guys are watching this after February, but that's fine. Whenever you start, your goal is to do this for at least a year. And then continue. It's going to change the way you think. It's going to change the person you are. And then suddenly next year, you're going to say, man, Patrick, $5 isn't doing it. It's not moving my needle. I need 10, 20, 30, 40, 50, whatever it is, you're going to do it. And you're going to start to add to that portfolio. Take a look at this really quick. This is tremendous data here, guys. Absolutely insane data. Look at this. This is 1 year invested in the stock market. The odds of you making money invested in the stock market for 1 year is about 73, 74%. Pretty good odds for only being invested 1 year. Look at this. 2 years, 78%. Go to 5 years, 88%. Go to 10 years, 95%. Go to 12 years, you're up here at 98%. And once you pass that and you get into 13, 14, you cross that 100% mark. Why that's so special, guys, is it proves to you that the majority of people don't lose money because the markets are tough or it's hard. They don't stay invested long enough. All you got to do is get invested and stay invested. You know, one of the funny things that happens with this challenge, I already see it happening as we start this challenge. People messaging me and people asking, well, what stock should I buy to best yield a result? Listen, you've already lost. If you've gotten to this point, you're serious about the challenge, by the way, so listen up. You've already lost. You want to know what I'm going to do? I'm going to invest in broad market index funds, in major cryptos like Bitcoin and Ethereum, and that's it. So I'm going to invest in an ETF that tracks the entire stock market, a total market ETF. You can look it up on Google, total market ETF. I'm probably going to invest some into a dividend ETF, like an S&P 500 dividend ETF. And then some days I'll invest a little bit into Bitcoin. And then some days I'll invest a little bit in Ethereum. And that will be my portfolio. I will not be trying to hand select stocks. Very rarely will I be hand selecting anything. I will be adding to those 4 major things. Now, I won't be adding to them all 4 at once. I'll probably be adding a little bit of this, and then I'll switch gears on one month and then switch gears another month. But the point is, I will just be adding to that. I think a lot of people are going to try to do this challenge where they're trying to get up their money as fast as possible, but that's not the premise of the challenge. The challenge is, can you consistently invest $5 a day? That's the challenge. It's not saying how much can you flip it to. Sure, go do it, but your chances of losing money are higher than mine. I guarantee it. Because I guarantee you one thing, I'm not going to have an account that's suddenly screwed. I'm not going to have an account where every day you were investing $5 into some penny stock that went to zero, and now your account's sitting at $2 and you're like, what happened? I'm not that guy. And I assure you that you shouldn't be either. Simply put, our goal is to buy great assets with solid health. We're going to buy them when they're cheap. And that means what I just stated is I'm going to have those 4 options, and that's relative to one another. One of them hopefully is cheaper than the other at that time, and that's the one that maybe I'll take a chance at. And I'm going to do it every single day. And this is going to take time. As you can imagine, lots of it. I just showed you an example of 30 years and what that looks like. But compound interest is the key. Take a look at this. Year 1. Now, this is every day, so this isn't exactly a perfect example. Disclaimer, disclaimer, if you do the math. But this is, if you invest $5 a day, on the left side, how much it's worth in investment value. And on the right side is simulated results of a left side simulated result and right side your cost basis. So the right side is what you put in. The left side is what the account is now worth. Why is it higher? It's because the market has gained value on the S&P 500. This is that visual example of what I just showed you in the graph in a chart, where you can see here, this top line is your equity curve. This bottom line is your money invested. This is, as you can see early on, you can barely notice it. But as time goes, look what happens. It gets wider and wider. That's profit. And that's what you want. And that's what not enough people do, because most people quit by here. Oh, it just doesn't work. Investing doesn't make a big enough difference to my life. Yeah, no shit, Sherlock. Sorry for my French. It's because nothing gets good until here. Nothing. Most people don't have the maturity or the discipline to do it, but you guys do. You're taking the challenge that you are going to invest $5 a day, no matter what the market's doing, no matter if we're in a crash, no matter if we're at all-time highs. We're investing $5 a day into the markets, no matter what, into something that you choose. There is no rush in this. So I want you guys to communicate with the group as much as you possibly can. I want you guys to learn as much as you possibly can. And of course, because of this, compound as much as you can. And finally, you have to. It's one of your rules. On top of investing $5 a day and learning, as said in the pinned post, one of your rules is sharing the results in the results sub-tab, and then tagging me on Instagram if you like. What is your account? What is your cost basis, which means the amount of money you've invested? And then what is the current account value? What's the difference? Are you up 5%, down 5%, up 10%, down 10%? I could care less of what the percentage is. What I care more about is the fact that you actually invested $5 a day, because most people can't do that. Most people are willing to go get their Starbucks, but not willing to put money in. So I wish you guys all the best of luck, every single one of you, in this challenge. I hope that you got a lot of value out of today's video, so now you understand the mindset behind this, and we'll see you guys on future trainings.